Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting on the low time frame with the bearish and then bullish scenarios. We expected a bit of a move to the downside for a wave Y, after which we like to see continuation to the upside in a bigger wave 5, as wave Y would then finish a higher degree wave 4. In this scenario, we're looking for flat in W, flat in X, and then wave Y can be either a zigzag, a flat, or a triangle. And preferably, wave Y finishes after these 0.618s. These fib times over here are taken from the high to the low of W and then put on top of the high of X. And the other one is taken from the low of W to the high of X, and then you double click over here. So I am comparing the length in time of W and the length in time of X with the length of wave Y. Now, wave Y officially does not really have a minimum amount of time it needs to have compared to W or X, but by far most commonly, wave Y is finishing after one of the 0.618s of W or wave Y. So that is something I'm keeping my eye on, with the first 0.618 sitting at the 29th of November, and the second one is also the 29th of November. Now, if this then over here is the low of potentially an ABC over here to the downside in a wave Y, then what I would prefer looking for is a flat structure, and then over here a wave A, then looking for a wave B to the upside, and then a wave C to the downside, which I think is incredibly interesting because you create a fake top, a fake breakout over here, baiting people in long positions, and then you're going to be looking for a wave C to the downside, which is always an impulsive quick move in a flat. So it might make people very scared. And also looking to the downside, we have the double top over here, or double bottom, sorry, at 35.5k, which of course is interesting, grabbing some liquidity. But also down here we have some extra support, some additional liquidity as well, still a weekly naked point of control down here at 34.7 as well. So definitely some interesting support in that area, and it also means we would clear up the golden target box resistance over here, sitting between 38.5k and 39k. If you then go to the most bullish scenario here, we're looking at this retracement to the downside as a wave 2. So we have a triangle over here, a finished wave 4 on a higher degree. We're already working on our wave 5 to the upside, where this is then your wave 1, looking for a 3-wave structure in a wave 2, potential ABC, but also here then a potential WXY, which is the main difference with the scenario I just shown over here, because you can't have a WXY inside a wave Y over here. So wave Y can never finish here. If this is a higher probability of a WXY, it then has to be a wave A, for then a B, and then a wave C, right? It can't be the end of wave Y. That's an important little nugget there. So in this scenario, in a wave 2, you can end wave 2 over here, or maybe another drop, but either or, if you have an ABC or both a WXY. That doesn't matter for a wave 2. Your most common target area is between the 0.5 and the 786, which is respected because price almost went to the 0.618. It literally just missed out on hitting the 618, taken from the low of E here to the high of this wave 1. Missed out on a few like dollars, basically missing that 618, but the 618, it is a common target for a wave 2, so possibly we're still returning to it. But eventually we do expect a bigger wave 3 then to the upside. So the direction is pretty much the same between these two, right? We were looking for a retracement, and then we're looking for a move to the upside, and then possibly here the flat scenario, right? That's something to keep in mind. At least in the bullish scenario, we're looking for continuation, right? We don't want to see a big rejection and a move to the downside. And then finally in the bearish scenario, currently the lowest probability scenario based on the price action we have here, we're looking already at a finished wave 5. So we have a finished 5-wave structure from the low here, 1, 2, 3, 4, and then a wave 5 that is already in, where the 1-to-1 has been hit, and that is a minimum target for a wave 5, which is taken from the low to the high of wave 1 and then put on the low over here, the end of wave 4. So basically this wave 5 is the same length as wave 1, and that is one of the targets of a wave 5, and you can see it is very nicely respected indeed. And then after that wave 5 is in, if we're looking for much lower prices to come, then preferably you're going to see an impulse to the downside, right? Because if you're going to start with corrective structures, like for example an ABC or whatnot, right? then you're looking at corrective structures, which means generally the probabilities are going to be higher. You're going to take this high, which means that after a retracement, you're going to still look for higher prices to follow after. So in this scenario, we're then looking for a 1, 2, and you want to see a bigger 3 to the downside, meaning price moving more parabolic to the downside, and also volume increasing as price is moving to the downside. If we then zoom in to the 15-minute over here, then we're looking at a potential ABC or WXY. Now I'll turn the bars pattern off for a second and talk about it soon. So here we're then looking for a 3-wave structure to the downside, where the 1-to-1 to the 1.236 is both for a wave C and Y the most common target area, but also for both the 1.618 is still a target, which is sitting on support over here. The blue target box just below at 36.3k to 36.5k, and inside that box we also have this daily naked point of control, 36.5k. Very interesting indeed. Also the fact that price missed the golden pocket by a few dollars over here could increase the probabilities for potentially another move down to hit that area, but we have to remain patient. So in this area, or in this scenario, we're looking for a 3-wave corrective structure, either A, B, and then a wave C, but for me it's actually quite difficult to count this as a nice wave C, even in a diagonal, because in an ending diagonal for a wave C, you're going to be looking for all waves being a zigzag. So you're looking for a 3-wave in a wave 1, 3 wave 2, 3, 4, 5. But if we count this move to the downside as a 3-wave, then we get a problem here, because a wave 2 can only be a zigzag family pattern, meaning you can't have a flat like this, right? That's not allowed. So that is why probabilities might be high to count this as a 5-wave structure. Look at a 3-wave to the upside here, and then another 5-wave structure, which then would result in a double zigzag, right? So you have an A, B, C, then you have a flat over here in X, and then you have another A, B, C to the downside here, finishing your wave Y, finishing a WXY, now returning towards the upside, but this would increase probabilities of a flat scenario, right? If this is a WXY, it increases probabilities of a flat scenario. So that's definitely something we have to keep in mind. Now the low has been made right on top of the 15-minute gap over here. You can see we had this gap. Price entered it once, came back later and filled the gap, which is very common indeed. We didn't actually fill the 1-hour gap. That's a bit meh, basically. So the 1-hour gap is just a little lower over here, which would have been in confluence with the golden pocket we have here as well. Then we have a little order block, the daily naked point of control. But yeah, locally at the moment, we're having a little bit of a move towards the upside. And if we compare it with price action of October, which is basically part of your wave 2. So the copy you see, the bars pattern, is a copy of this move. Because yesterday I had to think about this move to the downside in confluence with what we're seeing at the moment, right? What you saw over here was down sideways. Like you saw this stairs kind of like structure, right? And locally on price at the moment, it kind of mimics that move to the downside, where we have sideways, down, sideways, or down, sideways, down, sideways. And this is basically how price is moving to the downside, which looks like the bars pattern that we have as well. So if I remove it, you had this structure all the time, right? So it's not like a continuous deep fall for a wave 3. It's very like almost rangy, like a stairs to the downside. If we go to the most bearish scenario, of course, you want to see a lower degree 1, 2, and then a big continuation to the downside. This type of stuff is not really helping, because if we're looking for a bigger wave 3 to the downside, we're of course looking for strong continuation, where we then have 1, 2, 1, 2, possibly then another 1, 2, but of course on the 50-minute, counting this whole structure as a wave 1 is pretty difficult, right? It looks more like a 3-wave structure over here compared to a 5-wave structure. So currently, probability is not the highest that we are in a wave 3 to the downside. Also, preferably seeing some good bearish CVD divergences between some important pivots, which we don't have over here. And for a double 1, 2 also, or even a triple 1, 2, preferably, you also see a little bit of a diagonal scenario where you have your 1 2 1 2 1 2, and then you get the big move. So a nice little diagonal, and it's not that easy to really count this as a very clear, preferably contracting diagonal. So it's not the highest probability scenario at the moment. Now, last night when I was live on YouTube, we were talking about this gap, right? I put it on the chart last night, kept it on the chart overnight as well. Price moved inside the gap, reached the high of the gap, and rejected at the high of the gap. That's exactly what we like to see. So this gap over here has been filled, is what we were looking for. Now we can remove it as well, as that resistance has been cleared now, and we have to look more locally. Now, if we first zoom out before we go in CVD, we're still in the range, right? The value area low is one of the confluences down here inside this target box. Very interesting indeed, right on top of the daily naked point of control as well. Basically retested the point of control here, and now we move to the downside, so potential for continuation. We moved above, wicked the double top on the 6-hour chart, moved back into the value area, point of control, lost the point of control, maybe a retest and continuation down. That is quite common as well, where you just trade the range until it breaks, right? So the value area low in confluence with the target box, surely an area of interest, but we do have some bullish CVD divergences locally over here. So we had bullish CVD between these lows, higher low in price, lower low on the CVD. Target is this high, target achieved. Then price came down again with bearish CVD divergences. Now for a bigger move to the upside, this is not ideal, right? But these bearish CVD divergences already played out, and as price moved down, we created again bullish CVD divergences here, where now the target is this high over here. Now if I open the CVD chart, then you can see a higher low in price, right? And I actually have to do this. So we had a higher low in price, but on yellow here, lower low on the CVD, and also on blue, lower low on the CVD. Bullish CVD divergence, price moving up, price moving down. Over here we had a couple of bearish CVD divergences on yellow throughout this little move to the downside, and then we were down here, and then again on blue we had bearish or bullish CVD divergences, higher low in price, lower low on the blue line. So there's a little bit of absorption going on of market shorts in this area, where the target for this divergence is this high. The invalidation would be taking this low over here. We are just above the golden pocket again, and we have the daily naked point of control down here, which for me remains a very interesting area of interest. So that is also in the probabilities, something that I do keep my eye on. So on the medium time frame, which is 4 hour plus, we're still basically looking for another high in a bigger wave 5, right? We're looking for a 4 to finish, and then we're looking for still another high to be made in a wave 5. On the low time frame, the 1 hour time frame, we are like looking for a move to the upside, right? We're looking for a bounce where we have a higher probability for a wave Y and then a move to the upside, or we're looking for bullish continuation in a 2 and a move to the upside, where currently the probabilities for me would be more on the side of seeing a little bit more downside in this wave Y before continuation to the upside, which of course can also happen in a flat structure. And on the micro, it's just annoying that the golden pocket has been missed by a few dollars, and we have the blue box here. So that is why on the micro, I think probabilities are higher still to move to the blue box, or at least hit the golden pocket that we just missed. I mean, how rare is it to miss it by just a few dollars and not actually hit it? So that's quite annoying. So yeah, on the micro, actually still looking for that to happen, but of course it has to then break the bullish CVD divergences that we have over here. So I'm keeping an eye on what's happening locally and the reaction. If price moves up here, but we then start to create some very low time frame 1, 3, 5 minute bearish CVD divergences, that is definitely when I'm going to be looking for a move to the downside towards this blue box over here, and then observe the reaction at this blue target area. The resistance, by the way, that you see above is a daily sitting between 37.7 and 37.9k. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.